Hello everyone, my name is Rupam and I'm a consultant. I also conduct trainings on GLAP AR, supply chain management as well. From the art to art, this is the first module that I'm going to cover is on FA accounting. So to understand about an FA, first we have to understand the definition of an asset and asset life cycle and types of depreciation. Then we have to understand about FAR. At the end, we will understand journal entries as well, right? So, to begin with this, let me just firstly make you understand when you say that this is an asset of a company, right? Or anything when you pick is an asset of a company. How do you define it? To define that, we have a three major criteria. First, you understand the economic value. When you pick any asset, just think, does this resource is having some economic value, right? Who is a controller? Who is controlling this particular asset? The controlled by entity or not? It can be used to generate revenue in the current or a future period for a business purpose. In this, we have two examples. One is a vehicle which is used for a business purpose, another is a personal car which is used for a personal travel. Though both the assets are having an economic value, but controllership is not in this particular car. Controllership is not with the entity, but however, yeah, this is something which entity has a control. This also this vehicle we are using, suppose for the business purpose, which means that it is going to generate revenue for us, right? So it meets all the criteria. That is when you can say, okay, this is an asset of a company. However, my personal car is not an asset of a company, right? So after that you have to understand the classification. Now you understood that what is an asset. Now you have to understand, like, how can I say that this is a current assets, or how can I say a non-current assets, right? So this is a very broad classification. Any assets are classified like in a current and non-current, or you can also call as an FA, right? Some of the examples like land, building, laptop, chair. And when you talk about current assets, we have a cash account, accounts receivables, etc. How do you classify something which you thought which we think about a useful life? So what is the useful life of this particular asset? So the useful life is more than a year. I'm going to use this laptop for more than 3 years or 5 years, the chairs as well. So this will be falling under non-current assets. Let me take you to one of the example which we have is like for Accenture form 10K, which is the annual report of a company, where I can say that assets are classified as a current and non-current, and then both they have given it as a total of an asset. In non-current, we have property, we have goodwill, we have deferred tax assets, and in current, we have cash and cash equivalent, investment, receivables. These all are there, right? Yeah. See, in investment, when you talk about, we have short-term investment, which is under current assets, and we also have long-term investment as well, right? So this is my non-current assets. This is how any company present their annual report. To present the annual report, and when can you say this is an asset of a company? You are supposed to follow the guidelines or the standard rules and regulation. If your company is actually following IFRS, you are supposed to follow IS 16 to see the property, plant and equipment, and ASC 360 if it is a US cap, you can follow property, plant and equipment rules and regulation. But if your company is an Indian accounting standard, you have to follow AS10. Remember, these things are only about property, plant, and equipment. So when you go back, you can see here what I'm talking about here, property and equipment for this standard. Likewise, every line items will be having their particular respective standard. I'm talking about very specific about property, plant, and equipment. These are the standard which you can refer, which will tell you when can you define, what is the definition criteria, and what is the depreciation method. All that you will be able to get to know. Now any asset, when you acquire it, it goes through a life cycle. Like everything has a life cycle, like the way even asset is having a life cycle. I cannot just go and buy any chair or any computer, anything for my company until we plan for that. There will be a requirement gathering, there will be planning, there will be budgeting for that, allotted for that. Based on that, company acquire an asset. Once you acquire an asset, basically you report a capital expense in the balance sheet account, right? Then you start utilizing it. Utilizing means there should be a parallelly repair and maintenance also should happen. So this is a regular maintenance happening which will help you to keep the asset in good working condition, right? This is where you again go and impact the profit and loss account, like if it is a revenue expenditure. Then we have a depreciation. Again, you are going to impact the statement, and then we have a disposal. The disposal terms means you're retiring an asset, means you're removing it from a balance sheet account, and operating activities for disposal will be like an selling of an asset or scrap or maybe a disposal, right? So again, when we move on further, we will talk about a method of depreciation. Remember, SLM is very highly used method and very important method what we have it here. So SLM, when I say, this is nothing where what I'm saying that I'm spreading the cost over several years, right? So in this example, I'm taking the essential example again, where you can see that for property and equipment, when they talk about computers and software, they are actually depreciating for SLM method with 2 to 7 years. They have considered it, and then furniture they are considering 5 to 10 years useful life of an asset, and then for leasehold improvement we have a different useful life of an asset. So this is how any company will publish their annual report, and they disclose about the depreciation method as well. So we have a typical journal entries on an FA. Once you acquire any asset, you have a purchase of an FA where you say, suppose if I'm acquiring for 10,000 any table for the cash, right? I'll be having FA account debit to cash account 10,000 here. I'll be having over here. And suppose if I'm going to acquire this table on a credit, I'll be having a FA account debit again. We will be having an AP account, and then AP to cash account will be having where AP will get knocked up. Now second, what we are talking about is like depreciation expense, right? This is something which is done actually automatic in with the help of all the ERP, like SAP Fusion and many more ERP. But yeah, there are chances that you may have to pass this entry manually as well. And mostly company will pass this depreciation journal entries on a month end, and that will be a monthly expenditure. So in this example of 10,000 of the cost, I'm assuming that I'm going to use this table for 10 years, right? And I will just calculate the depreciation for for 10 years, like, or you can, no, you can just go and then you can consider, 10 years, how much is the depreciation, and then you can consider for 1 month. For 1 month, this is the depreciation, or 83.33 will be the depreciation which I'm going to charge for this particular asset. Now here comes selling of an asset. Suppose you are charging this for around like 1, 2, 3, 4, like up to 12 months. Now you have come to the end of the fiscal year, and you are thinking to sell this asset for 12,000 after a year, right? So in this scenario, what I'm saying that I'm assuming that I'm going to sell for 12,000. So I'm going to receive a cash of 12,000. Since my FA account I'm selling it, this will go under credit. So opposite entry we will pass it for 10,000. Your depreciation again will go as a contra entry, but it will be again here. In this case, it will be for 1 year, because I already used for 1 year. So this is for just 1 month. So just consider for like 1 year, and when you just do the rounding, it will be around 1,000 approx. Then whatever will be there, the balancing amount, that will be like a gain, or gain on asset disposal. So this is one of the example when I'm selling it for more price. Suppose if I'm selling for around 8,000, so I'll be having over here cash account like 8,000, and total debit will become 9,000, right? And this is a 10,000. So you can see here, you're going to have a loss here in this scenario. So you have to understand how the journal entries are passed in case of acquisition, in case of any expense, in case of any disposal or a depreciation as well. Now when we have it, these journal entries, you have to understand now register, FAR, or fixed asset register, what it is, suppose you have seen that all the life cycle of an asset, so where it is recorded. So basically asset register is a detailing of the asset, right, which gives information about all the information, like who is acquiring, where the asset is hold, which is the cost center holding this asset, which person is responsible for it, when the maintenance is happened. And when you talk about any stock, right, like it will also give information about how many quantities are there, what is the condition of this inventory. So all the details about an asset you will be able to see in asset register framework. Thank you.